Hey everyone, welcome back. Today, we're going to dive into one of the most powerful concepts in all of investing, and it comes straight from a legend, Howard Marks. We are talking about market cycles, and I promise you, by the end of this, you're going to see the financial world in a completely new way. All right, let's get right into it.
You know the feeling, right? We've all been there. You watch the market go way up one day, and then it just plummets the next. It feels totally chaotic, random, like you're on this wild roller coaster and you have zero control. It can be so stressful. But what if I told you it's not nearly as random as it looks?
So the key to making sense of all this chaos comes from Howard Marks, and his idea is honestly brilliant. Mostly because it has nothing to do with complicated math or trying to predict the future. Nope, it's about something way more fundamental, something deeply human.
Okay, so first things first, we've got to shift how we look at this. Instead of getting lost in the day-to-day chaos, we need to start looking for the bigger patterns that are always there.
Look, on any given day, sure, the market can seem totally random. But here's the thing. When you pull back and look at the bigger picture, you start to see that all these ups and downs, they're not just noise. They're actually part of a rhythm, a repeating pattern. That's really the first big step here, learning to see the cycle hiding inside all that chaos.
So what's actually driving this rhythm? What's the engine behind these big moves? Let's dig into the mechanics of it. You know, if you look up the textbook definition, it'll tell you that market cycles are tied to the economy, company profits, interest rates, all that stuff. And yeah, that's true, but that's only half the picture. It tells you what's happening, but it doesn't really tell you why. And this is where things get really interesting. Marx has this incredible analogy. He says, don't think of the market as some cold logical machine. Think of it like a giant pendulum, one that's constantly swinging back and forth.
And this pendulum, it's swinging between two of the most powerful forces out there, human emotions. So on one end of the swing, you've got pure greed and euphoria, this feeling that prices can only go up forever. And on the complete other side, you've got fear and despair, this deep-seated belief that things are terrible and will never, ever get better.
And this is the absolute key. The market is always in motion, always swinging from that extreme of optimism to the extreme of pessimism, and then right back again. It literally never stops.
This quote from Marx just nails it. That perfect, fair price, the spot right in the middle where everything makes sense, well, the market just blows right past it on its way to the next extreme. It almost never just sits there in that happy medium. Okay, so if we agree that emotion is the real engine here, let's peel that back a little more and see how this actually works.
So just look at this for a second. When a market hits a peak, prices aren't just a little bit above average. They're often way higher. And that massive gap, that's not based on logic. It's not fundamentals. That is pure, unfiltered, widespread optimism.
And this is where things get really dangerous. At the top of that swing, when everything is euphoric, people don't just feel optimistic. They start to believe there's no risk left in the game. And as Marx points out, that exact moment, that belief that risk is gone, is precisely when risk is at its absolute highest. This really shows you the whole emotional roller coaster, doesn't it? You can see the whole journey. It starts down at the bottom with fear, which slowly turns into optimism, then that becomes excitement, and then it hits that peak of pure euphoria. But of course, the pendulum has to swing back. Anxiety creeps in, and eventually it all slides back down into fear. That's the cycle. All right, so this is a fantastic theory, right? But the real question is, what do you do with it? How does this actually help you? Let's talk about how to actually use this idea. And this is maybe the most important takeaway of all. Marx is very clear. Trying to predict the exact day or the exact price where the pendulum will turn is a waste of time. No, the real skill, the most important thing, is to figure out where we are in the cycle right now. Are we closer to the euphoric end or the despairing end of the swing? So how do you do that? How do you take the market's temperature? Well, you look for clues. When you're getting near a top, the news is all good, all the time. Anyone who questions it gets called an idiot. The riskiest investments are suddenly the most popular. Everyone you know is bragging about how much money they're making. And you start to hear those four dangerous words. This time, it's different. And the signs of a market bottom? Well, they're the polar opposite. It honestly feels like the world is ending. The news is just relentlessly bad. You hear people say they'll never invest again. They're selling everything, not based on value, but just out of pure fear. And if you even whisper that it might be a good time to buy, people look at you like you're completely nuts. So when you understand all this, The pendulum, the psychology, the clues, it gives you a huge advantage. It gives you what we can call the contrarian's edge. Now, being a contrarian doesn't just mean you do the opposite of whatever the crowd is doing for the sake of it. No, it means you're the one who stays logical when everyone else is being driven purely by emotion. You're acting on what you observe, not what you feel.
Just look at the difference here. The crowd, they just get carried away by the pendulum swing. They feel fantastic at the top, so they buy more. They feel terrified at the bottom, so they sell everything. But the contrarian, they see the pendulum swinging, and they do the exact opposite. They get more careful when everyone's euphoric, and they get more interested when everyone is scared.
So really, it all comes down to two simple, but not easy, steps. First, you got to see which way the emotional tide is flowing, and you have to fight the urge to go with it. And second, you have to be brave enough to act against it, to be cautious when others are greedy, and to be bold when others are fearful. And all of this leaves us with a million-dollar question, doesn't it? The core lesson here is that the crowd is almost always wrong at the emotional extremes. So I'll leave you with this. Take a good look around. Listen to the news. Listen to what your friends are saying. What's the mood out there? Where do you think that pendulum is swinging right now?